$93?
It's a number that just stops you in your tracks, isn't it?
It really is. I have to admit, when I first pulled at the terminal this morning, and, it's January 24th, 2026, I honestly thought the data feed was glitching.
Right.
I refreshed the page twice.
Yeah.
I mean, we're used to seeing crypto swing 20–30% in a week, right?
Sure. Or some obscure penny stock.
Exactly. Some hyped-up message board thing that goes to the moon. But we're talking about silver here. Just plain old silver.
Element 47.
Yeah. A physical metal that's been around for millennia. And yet, you look at this chart, and it is moving like a tech startup on IPO day.
It's staggering. And what we're seeing, it's not just a price spike. It's a historic repricing event. It's not often you see a commodity, something so fundamental, move with this kind of velocity.
Velocity is putting it mildly. Let's just lay out the stats here to set the stage, because the numbers are, frankly, absurd.
Go for it.
Silver prices have effectively tripled over the past year. Tripled. If you had a stack of silver coins in your sock drawer last January, they're worth 3 times as much today.
It's incredible.
And just when you think, okay, surely it has to cool off, we hit 2026. And in the first 2 weeks alone, it's up another 25%.
Exactly. And to put a specific number on it, spot silver hit an all-time high above $93 per ounce this past Thursday.
$93. I remember when people were excited about it hitting 30.
It did pull back a little to around 90 on Friday, but the psychological barrier, it's been shattered. The ceiling has essentially become the floor.
It feels frantic. It really reminds me of those meme stock eras we lived through a few years back.
Right.
Everyone piling into a trade because it's funny, or to stick it to the hedge funds.
Yeah.
But looking at the research you brought today, this feels different.
It is different, and that's really the mission for this deep dive. We need to separate the hype, because there's always hype when prices move this fast from the structural shifts. We need to understand why this is happening right now, because while the chart looks like a rocket ship, the fuel is a really messy convergence of factors.
You've got old school economics.
Right, and then some very sudden, very intense geopolitical shocks, and then, and this is the part that really surprised me, a kind of supply chain weirdness involving tariffs that didn't even happen.
That supply chain twist is absolutely fascinating, and I want to get to that. But let's start with the context. You can't understand January 2026 without looking at the runway of 2025, right?
Absolutely. If you just dropped into this market today, you'd think it was pure mania. But 2025 was the foundation.
You said it closed the year with, what, a near 150% gain?
Almost exactly. So if we're building a house, 2025 was the foundation and the framing.
Which is massive in itself. In a normal world, 150% gain for a boring commodity is like a decade's worth of movement in a year. So what were the materials for that foundation? What was driving that initial push?
It was what I call the legacy macro factors. These are the big, slow-moving economic tectonic plates.
Okay.
You had the Federal Reserve cutting interest rates. Now, if you're not a Fed watcher, this is crucial. When rates go down, non-yielding assets like gold and silver, they just become more attractive.
Explain that mechanism a bit more. Why does an interest rate cut make a rock more valuable?
Well, think about it like this. If you have cash in a savings account and the bank is paying you 5% interest, you're pretty happy to leave it there, right?
Sure.
There's an opportunity cost to taking that money out and buying a bar of silver, which, sits in a safe and pays you 0%.
It actually costs you money to hold it.
But when the Fed cuts rates and that bank account drops to paying you 1% or 0.5%, suddenly that opportunity cost just vanishes.
Right, so the penalty for holding a dead asset disappears.
Exactly. Plus, all through 2025, the U.S. dollar was just getting hammered.
Which is rocket fuel for commodities.
Total rocket fuel. Since silver is globally priced in dollars, when the dollar loses purchasing power, it just mathematically takes more dollars to buy the same ounce of silver.
Basic inflation math there.
Then you add in rising global debt levels and, real concerns about sticky inflation. Those factors created a perfect storm for precious metals all last year.
Okay, so that explains the 150% gain. That makes sense. But here is where it gets really interesting to me. Usually when an asset runs up that much, everyone takes a breather, traders cash out. But the calendar flipped to January 1st, 2026, and instead of cooling off, silver went parabolic.
It accelerated.
Another 25% jump in 2 weeks. Those legacy factors, rates, debt, they didn't change overnight on New Year's Eve. So what's the new fuel?
That is the key question. The legacy factors explain the trend, but they don't explain the velocity of these last 2 weeks.
Okay.
The answer lies in geopolitics. While the economic stage was set, the actors on that stage started improvising in early 2026. We are seeing a classic flight to safety, but it's being driven by very specific, very high-stakes incidents.
I noticed the source material highlighted two specific regions, Venezuela and Iran.
Correct. And we have to look at these strictly as market catalysts. Regardless of the politics, markets hate uncertainty. They absolutely loathe conflict involving energy-producing regions.
So let's break them down. What happened with Venezuela?
The catalyst there was the U.S. arrest of Venezuelan President Nicolás Maduro.
Wow.
Now, put aside the politics for a second. From a market perspective, the arrest of a sitting head of state by a superpower, it sends a massive shockwave through the system.
It disrupts the whole rule book.
The whole thing. It immediately raises questions about oil supply chains, about regional stability, about potential retaliation.
It creates an anything-can-happen atmosphere.
Precisely. And
Okay.
almost simultaneously, we're talking within the same news cycle, we have this escalation in Iran. The sources point to explicit threats of U.S. intervention over government crackdowns on protesters.
So you have potential regime change or direct military intervention looming on two different continents
Involving major energy players.
at the exact same time.
And that's the mechanism at work. When you have that level of friction, capital gets scared. It looks for a bunker.
Right.
And for 6,000 years, that bunker has been gold and silver. Investors are seeing the headlines and they're saying, I don't know what the world looks like in 6 months, so I'm going to buy the thing that's held value since the Roman Empire.
It's the ultimate panic button asset. But why silver specifically? Usually gold is the primary safe haven. Why is silver outperforming?
It's what we call the beta of silver. Silver is like gold on espresso.
I like that.
It's a much smaller market by market cap, so it takes less money to move the price. When money floods into the safety trade, gold moves steadily, but silver tends to just explode.
Plus, at $90 an ounce, it's probably more accessible to a retail investor than gold trading in the thousands.
That's a huge psychological factor. So if the dollar's already weak, that's our legacy factor, and then the geopolitical stability enforcing that dollar looks shaky, that's the new factor. The move into silver becomes a stampede.
Okay, so we have the economic backdrop, the geopolitical sparks.
Yeah.
But there's this other layer you mentioned, this supply chain twist. This isn't just about people pressing buy on a screen.
No, this is physical. This is where supply and demand mechanics get really messy. We're talking about where the actual bars of silver are sitting.
And according to our sources, they aren't where they usually are.
Not at all. London is traditionally the global hub for silver trading. It's the center of gravity.
Okay.
But recently, we've seen a massive dislocation. The physical stockpiles have been draining out of London and accumulating aggressively in U.S. warehouses, specifically the COMEX vaults.
So the silver is migrating to America. Why? Why would you rush all the silver into the U.S.?
This brings us to the aha moment. It's the tariffs.
Ah, right. The tariff scare.
Exactly. President Trump had been threatening these significant tariffs on a range of imported precious metals, including silver. Now, markets are forward-looking. If you're a major buyer, an industrial user, a bank, and you hear a tariff might make importing silver 20% more expensive, what do?
You don't wait. You buy it all now. You front-run the tariff.
You front-run it aggressively, you buy as much as you can, and get it inside the U.S. borders before the tariff hits. And that's exactly what happened. It just sucked the liquidity out of London and jammed it into U.S. warehouses.
But here's the kicker. Trump backed off those threats.
The source notes he backed off last week, mid-January.
But the silver's already here.
Exactly.
Yeah.
You can't just teleport thousands of tons of silver bars back to London overnight. The dislocation has already occurred.
Wow.
The shortage in London is real, even if the political threat that caused it has evaporated.
That is wild. It's like
Yeah.
a hurricane is forecast, so everyone evacuates the city. Then the hurricane turns away. The danger is gone, but you still have a massive traffic jam of people trying to get back home.
That's a perfect analogy. And in financial markets, that traffic jam creates a floor under the price. If you need silver in London right now to settle a contract, good luck. It's all sitting in a vault in New York.
So this perfect storm, economics, war anxiety, and a supply chain bottleneck from a phantom tariff.
Yeah.
But I want to pivot to the psychology of the buyers.
Okay.
Because I mentioned meme stocks, and I think a lot of our listeners remember the silver squeeze of 2021.
Oh yeah, the Reddit rebellion, the apes.
Is this just Reddit 2.0?
The data suggests otherwise. The consensus in the source material is very firm on this. This is not a meme. This is structural accumulation.
Structural accumulation sounds a lot more serious. What does that actually mean?
It is serious. In 2021, you had a flash in the pan, a speculative frenzy. It was people buying call options, trying to force a short squeeze. It was offensive,
Right.
an attack.
Right.
What we're seeing now has already surpassed the heights of that 2021 squeeze, but the buying behavior is totally different.
How so?
They aren't just dipping in, they are reallocating. The source uses the term core macro asset.
Meaning they're treating silver like they treat Apple stock, something you hold for the long haul.
Exactly. It's becoming a permanent slice of the portfolio pie. And the numbers back this up. In the past month alone, retail investors poured $921 million into silver-linked ETFs.
Almost $1 billion in a month.
That's nearly $1 billion of buying pressure. But here's the stat that really blew my mind, and I think this tells the whole story.
Yeah.
The iShares Silver Trust, the biggest silver ETF, has seen 169 straight days of positive inflows.
169 days. Wait, let's process that. That's, what, nearly half a year?
Trading days. So we're talking about roughly 6 months of relentless buying.
Without a single break.
Every single day, no one is selling.
That's incredible. A meme rally lasts a week, maybe a month. But a streak of 169 days.
Right.
That isn't a fad. It's a habit.
It's a conviction. It suggests that regular retail investors have lost faith in the alternatives. They aren't buying it to flip it at $100. They're buying it to hold it. This isn't FOMO. This is fear of holding cash.
That level of consistency is really telling. It implies they aren't looking for an exit strategy.
Yes. It signals a shift in psychology from greed to preservation. When you buy a meme stock, you hope to get rich. When you buy silver for 169 days straight, you are hoping to stay safe.
So the big question is, can this keep going? I mean, nothing goes up in a straight line forever. Yeah, gravity has to kick in eventually, right?
You would think so, and we did see that little pullback on Friday, which is healthy. But the consensus from the sources we analyze is that, yeah, the rally should continue.
Because the drivers are still there.
Exactly. Let's run down the trick list. Has the Fed dramatically hiked rates? No. Is the global debt problem solved? Definitely not.
Are Venezuela and Iran resolved?
No. If anything, they're escalating. And is the physical supply chain back to normal? No, that metal is still stuck in the wrong place.
So the engine is still running hot.
It's redlining. Now, the source does mention one risk factor. Investors are crowding into silver.
The crowded trade. That's usually a warning sign, isn't it?
It can be. Imagine a boat. If everyone runs to one side, eventually the boat tips over. When everyone who wants to buy has already bought, there's no fresh money to drive the price higher.
But
the analysis suggests the crowd isn't too big yet.
there's still room on the boat.
There is room for growth. If silver is truly being repriced as a core asset, we're essentially discovering a new price level for it. We might be moving to a new plateau.
That's a fascinating distinction. Repricing versus just rallying. A bubble implies the price is wrong. Repricing implies the old price was wrong and we're finding the new normal.
Think about it. Silver is still way below its inflation-adjusted highs from 1980 or even 2011. Many experts argue that at $20 or $30, silver was artificially cheap for decades. At 90, maybe it's just finally catching up to reality.
It really challenges your perception of value.
Yeah.
You know, we get so anchored to a price being in a certain range. When it breaks out, our first instinct is it's a bubble.
But sometimes the currency itself is just breaking.
So let's summarize this whirlwind for everyone listening. We're looking at a market that has defied gravity up 150% in 2025, and then another 25% in just the first 2 weeks of 2026.
Right.
And we've identified a three-pronged spear driving this. One, the economic legacy of debt and Fed policy, the slow burn. Two, the acute geopolitical shocks of the Maduro arrest in Iran, tensions, the spark.
The spark, yes.
And three, the weird supply chain dislocation caused by the tariff threats, the accelerant.
That's a perfect summary. And undergirding all of it is this shift in psychology, this structural accumulation by retail investors treating silver as a safety net.
It really is a case study in how interconnected everything is. You can't just look at a chart in a vacuum. You have to look at geopolitics, tariffs, and what the average person feels about their savings.
It's all one big ecosystem, and right now, that ecosystem is flashing red lights that point toward precious metals.
So as we wrap up, I want to leave you with something to chew on.
Yeah.
I've talked about prices and tons and percentages, but let's zoom out.
Go for it.
If we are seeing a world where the average retail investor, the teacher, the plumber, is reallocating their portfolio to treat silver as a core asset, equal to stocks or bonds, what does that actually say about the system we all rely on?
That is the $93 question.
Right, because if silver is moving from a speculative fringe bet to a foundational pillar of regular people's wealth, does that fundamentally change how we should view the stability of the global currency system? Are we just witnessing a vote of no confidence in paper money disguised as a bull market in metal?
It's a thought that keeps me up at night. When the safe haven becomes the main event, the world has already changed.
Something to think about next time you check the markets. Thanks for diving in with us today.
Always a pleasure.